The Financial Survival Network, helping you to survive and thrive in the new economy. Get your free financial survival toolkit and find out where to buy gold and silver safely at great prices. Sign up at financialsurvivalnetwork.com. This is the Financial Survival Network.
1490 WGCH. This is Kerry Lutz, and you're listening to the Financial Survival Network, which is brought to you by Miles Franklin. They've been in business selling gold since 1990, and I'm a customer because when you buy, they ship. To find out more, go to milesfranklin.com or call them at 800-822-8080 and get a free quote. It is time for another episode of The Park Perspective with Danielle Park and Kerry Lutz. Danielle is a financial analyst who's been writing and speaking about all the things that we speak about on the Financial Survival Network for years. She's also a noted money manager, and nothing seems to surprise her anymore. Hey, Danielle, welcome back. Everything good, I hope?
Hey, Kerry, things are good in this part of the world, yes.
Yeah, well, this is a tale of two worlds. There's the world of financial chicanery and alchemy, where anything is possible, where all dreams can be answered. And then there's the real world that the rest of us inhabit, where people actually work for a living, where you do things that hopefully have value and you get compensated for them, where you feel more and more like the financial world is your master and you're at their beck and call. What's going on with these two worlds?
Yep, I think it's an absolutely accurate statement that we've had this distinction between the financial world and the real world, where real people work and need to, buy things to support their family, the real economy, if you will, and what's been going on in the financial sphere over the last few years. And this has been, the heyday of the banking sector. There's no question this decade that I believe we're now leaving from has been this epic center that'll go down in history as the time the bankers went amok and, threw the world into a major speed wobble. And that's what we're seeing. It's interesting that last week the U.S. ISM finally contracted, Kerry. It's something we've been expecting mid-year for 2012. I think this confirms the thesis of a global recession now in play around the world. And that will increasingly, I think, bring to fore more pressure on the type of people who have been scamming this system and making profits while everything else is in decline.
My personal belief was, just as the Great Depression had little ups and downs, peaks and valleys, we never really emerged from the crash of 2008, 2009. And I believe that it was a global depression that was papered over because we don't have bread lines, because we have electronic benefit cards. We don't have people on the corner selling apples. They're hidden away. We do have some tent cities in the U.S., but the parallels are striking. And where statistically we may not have been in a recession, in reality, all the indicators of poor economic health have done nothing but go up since 08-09, right?
Absolutely. I mean, the numbers speak for themselves, and you can massage them and pretend as much as you like, but we've made back, for example, in the United States, half the jobs lost in the recession of 08 have been recouped. You've seen a 5% decline in real median income over the past few years for real households in America. At the same time, we learned a couple of weeks ago, household net worth declined 39% during that period, Kerry. We have a participation rate in the labor market right now of 58%. This is way below where we were at the peak of 07 and indeed in any average year period prior to that. So, every metric that we look at is showing that there has been no recovery of any meaningful kind for the real world over the last 5 years. And the only thing that actually has been productive, and there's a couple of things that are moving in the right direction, which is that the debt to income ratios for American households have worked their way down to 114% today, Kerry, which is a 9-year low. and it is relative to 134% debt to income that we saw at the peak of your credit cycle in 2007. So that's definitely progress in the right direction in the sense of American consumers and households are starting to work their way out from under the oppressive burden of record debt. It's just that it's going to take several more years before that can come back to healthy levels, which is savings rates above 10%. We're nowhere near the and debt-to-income ratios well below 100%. So, when we get into that territory, we'll know that we're getting close to the end of this long period of malaise.
Yeah, one thing about those debt-to-income ratios decreasing, a lot of it, and I don't know what percentage, is due to defaults, effective liquidation of the debt and bankruptcies, because bankruptcies still running at or near record highs.
That is true, but that's also a normal function of capitalism, Kerry.
Yeah.
We can't bemoan that there's moral issues perhaps around bankruptcy and getting out from under debt, but at the other end of the spectrum is we want this economy to deliver. We want these people to get out from under the oppression so that they can go back to being consumers that are spending money, credit, actual cash. And that's when you're going to be in the next big boom of prosperity and increase global demand. But until we get there, this idea, and this is, I think, that's really come to the fore in the last little while. We saw, the interventions last week, Terry. We had China cutting rates. We had the ECB coming up with their 20th nervous breakdown summit, 3 in the morning, announcing, don't worry, we're going to capitalize banks directly, all that stuff. And what happened to the stock market, Kerry? It popped for a little bit and then gave up the ghost again. And I think that here's the tale of two worlds you're seeing. We're having massive disappointment on the earnings front. We're having massive poor visibility looking forward. Companies, ratcheting down expectations. Much fanfare about Alcoa last night beating expectations. Let's not forget they had a negative result for the quarter, Kerry. So, when you get that disconnect between what's going on with real consumption and company earnings and the fact that they're under assault, at the same time you have the financial sector who never predicts recessions, who never sees slowdowns coming because it's not within their bread and butter to predict these things. You're
so cynical, Danielle. You are so cynical.
I've worked in this world a long time. It's one of the areas I feel fairly comfortable commenting on. They're still, you got the analyst community still expecting double-digit earnings growth for the rest of this year, Kerry, and 2013. So long as the stock market is priced on these ridiculous assumptions, which it presently is, you see, for example, even with the sell-off the last few days, the VIX is still falling, Kerry.
Sure.
Why is the VIX falling? Because complacency among those who are trading this market, the Investors Intelligence Survey, you've only got about a 24% ratio of bear sentiment. The traders or players, if you want to call them that, have bought into this idea that central banks will win the day, will continue to inflate, will continue to stimulate, will continue to keep asset prices up. Except I'm fairly comfortable that will never happen because it never happens. In the long run, they always lose control of that. It's always cut to the point where they can no longer have that kind of quick fix effect. And that's when the math comes back to haunt the over exuberant.
I know what you mean. It's always a good time to buy stocks. Stocks never go down. Houses never go down. And we go on and on. We see this constantly, this optimism. And it's okay to be optimistic, but you have to be realistic too. And to think that happy days are here again in the face of what we're seeing here, in the face of a global slowdown and a global debt bubble that has burst. I don't know how you can say things like that with a clear conscience.
Well, let's look at Mr. Diamond in the news this week, the British Barclays head, right, in up before the officials being questioned on this whole LIBOR manipulation. Now, here we see that there's some dawn of reality hitting a man like Mr. Diamond because we heard today that he must forego the $30 million pound bonus deferred package he was expecting to receive. Okay, now you're starting to have the real world dawn on these people who've been living in this world where they get to fix all the rules, take unfair advantage, pay off everybody that's in a regulatory or a political position affecting them. It's all this cozy little club where everybody extracts the hell out of everything and nobody does anything ethical or real. They were all existing in that perfect little bubble, and so they probably haven't even noticed what's going on in the real world. But when you start clawing back their compensation, Carrie, that's my point. You start to get even the attention of people like Mr. Diamond.
Yeah, who would believe such a thing would be possible? How the mighty have fallen. And this whole LIBOR gate, it just reinforces the feeling of myself, and I think you and all of you, that we've just been scammed for decades. My father used to say, if you do anything wrong long enough, you're going to get caught eventually, and they're getting caught.
Oh, well, now that we may start looking, and you and I were trying to speculate before the call on the timing of why the LIBOR gate has broken now, when we've known about it for years, Carrie. I mean, people have been writing about this since at least 2007 that I'm aware of the fact that all this rate rigging was going on and that banks were making, easy profits just levering up on various little mismatches of trade, which they influence and control themselves. So no surprise that they're able to make some bucks off that. But perhaps it's something political. Perhaps now we're coming into this next election in the United States. I think it's possibly two things. One perhaps inside person or persons decided that they now want to ring the bell on this thing. Maybe it's a political motivation to, push back on the chances of Obama getting reelected, or maybe it's, someone just actually wanting to do the right thing, Carrie. God forbid that someone inside an institution actually comes to some conscience and says, you know what, I don't think this is right anymore. I'm going to pull the plug on this. And maybe the authorities or the higher ups in the bank say, oh boy, this is our big bath opportunity. We better get ahead of this. We better spill the beans up front before it becomes, found out behind us kind of thing. So maybe that's it, but maybe they're looking for a catalyst to come back to this idea of, reorganizing the banks, too big to fail, Glass-Steagall, all the stuff that we've been begging people to acknowledge as necessary. Maybe now they're going to use this as the next catalyst to revisit all that stuff, which they should have done in '08, which Obama turned his back on and went off with his buddies when he should have been on the watch. And maybe now they're going to use it to try and throw him out of office. Now, whether Romney does anything about it, if he gets in, that's a whole other kettle of fish.
I'm a little bit more cynical about the prospects of lasting reform, because my personal feeling is that the system is corrupted and broken beyond repair, and we need a new paradigm here. I don't think it's realistic to believe that people are just going to act for the common welfare, but I think that they should be willing to act and forced to act in a lawful manner that at least doesn't go out and deliberately hurt the public and the people that they're supposed to be helping. And, I just don't know that the system can reform itself at this point. And it's kind of terminal, too. I mean, have you been watching anything about the bank glitches going on, Danielle?
The which?
Glitches, the bank glitches, RBS and Ulster and NatWest and the Russian bank and German bank, and it's starting to get worrisome, isn't it?
Yeah, it is. I mean, it's been worrisome for a long time. The thing is, I think you're right. I think that the corrupt systems never repair themselves from the top down. But I think that perhaps you get revolutionary forces in the masses of people who are being harmed by it, who finally won't tolerate it because they can't be bought off with more free credit and, ballooning asset prices themselves. When they realize they really aren't getting anywhere, or they really aren't getting any traction and they're going backwards, it's interesting. Food stamp usage, you mentioned that, is up 30% since 2008 in America, Carrie. Mm-hmm. So, there's a growing surge of people that are becoming more desperate and have less tolerance or ability to just put up with the status quo. And maybe that's the way that all these things have ultimately been pushed to change, because from the bottom up, enough people just stand up and put their foot down and also change their behavior. At the margin, you have a culture that worshipped credit and bankers, now fully in reverse. You have a culture where they want to get bankers' heads on sticks and they want nothing to do with debt. That's global. I mean, look at in Germany, okay? Last week, the nonsense out of the 19th meeting was this idea that Germany was somehow going to, blink. Merkel blinked was the headline, right? That Germany was going to tolerate, capital injections directly into Euro banks, and that it was somehow not going to be an obligation of the sovereigns. Well, turns out, no, Germany didn't actually agree to that. They're still not caving on the mutual liability aspect. But look at Angela Merkel's approval ratings at home in taking this hard line, which I believe she ultimately will have to side on, even though she's in bed with the bankers and wanted to be part of the Euro dream and all that. At the end of the day, her job comes from her constituents. And she presently has 66% approval rating in Germany because she's sticking to that hard line. Look at the American politicians. Look at Obama. You've got 81 or something percent, I saw a poll this week, of Americans saying they're dissatisfied with the way the country's being run. So I think this is where, it's when individuals won't take this anymore, and I'm not saying everyone changes their behavior, but it's at the margin that these individuals will end up topping this corrupt regime.
And one further point is the last financial collapse after Lehman, basically the Fed wrote a check for $16 trillion. Forget about TARP, forget about the stimulus. They recapitalized all these banks, which obviously showed something happened with the derivatives, and they never exactly explained why the money was given out, how the banks could have needed all that money, and what happened to the system that could generate those gargantuan losses. When it blows up this time, and I think it's going to, you and I probably agree on that, one way or the other, are they going to write a check for $120 trillion? Can they do that? I mean, because that's what we're looking at. The losses go up geometrically, right? Every crash.
Right. Right. Well, the most pessimists would say they will, and they'll just continue to print ad nauseum. But I actually don't think that that's the case, because there's a finite nature to numbers. Thank God for math, because in the end, math must be served. It's the only objective in this whole pot of soup. And, look, okay, here's an example. Spanish bond yields are above 7% this week, Carrie. That's, widely accepted as the rate past which the whole thing, all bets are off, nothing can be sustained. Spain needs a direct bailout. And as soon as you do that, you turn around and there's Italy standing with bond yields above 6%. You can't, plug all these holes with two fingers. There's too many holes, and it's just going to keep coming back and coming back. And the Federal Reserve is now left something like 50 on Carrie. They can manipulate a little bit more. They can toss another $150 billion of something, buy longer dated bonds, but at some point, they've crushed the economy already. We're already in a global recession. That means all the revenue estimates are hopelessly optimistic. I mean, all the deficit reduction ideas that people have floated in the last little while are way off the mark. We're going to come in with deficits, much greater than anybody's expecting. And every time that math gets out, Carrie, you're going to see capitulation of some kind, because people will finally just have to give up on this dream of perpetual Fed rescue.
The other thing is that when the interest rates are manipulated, aside from money being created that shouldn't and credit being extended that shouldn't, the other distortion that's a big one is that risk no longer gets calculated into the equation of credit extension. Like, you go to a pawn shop, you watch those shows on National Geographic Network, Pawn Stars, and you go in there and you're hawking some item, and you pay 2% a month interest. And the reason you're paying 2% per month is because you are at extremely high risk of defaulting. And that's the rate that they can maintain profitability at, whatever their profitability goal is. When you're paying 1% and you're a lousy credit risk like Spain or Portugal or Greece, which is what they were paying, 1 to 3%, there's no risk priced into the credit. And therefore, there's no break on the credit. Now it's 7%. There's a risk premium on there, and it's going to go higher as the true risk is recognized all over the world. And that probably is the best thing that could happen.
Best thing that could happen, because this is truly a morality play writ large. It really is. This is about human behavior and the choices between good and evil. And we've chose evil for the last many years. We've chose easy bucks, pretend and extend, paper it over, push the risk onto the taxpayer, don't pay for today, you just leave everything for later. And that lazy behavior and corrupt behavior has been the undoing of us. So that's why I think you hit a point where that starts to go the other way. Not because anybody chooses pain, but because there's only pain to choose from. There's not another good option here. It's just the math is what it is. It's mammoth. It can't be paid back. Rates are going to go higher on all those people that have borrowed too much. And that means they won't be able to pay back the principal, which starts this whole write-down of inflated asset values. Finally, we've had phases of that in the last few years, but every time that started to happen, central bankers have pumped in money to try and stop it. And I think now we get to the point where the truth increasingly escapes. And that truth is you can't keep pumping like Mr. Krugman and company keep saying. You can pump more and we have to force more demand. No, the answer is we have to allow savings and healing. And in doing that, we have to forego present consumption to rebuild the coffers, and that will be the wind at the back of the next expansion. But it's a long process, and it's not happening this year.
You made the hairs on the back of my Austrian economic neck stand on end when you said that, because it's all about savings. And you led inadvertently to the next point, which I've been talking about, and I think it's the only way. You could call it what you want. It's pretty much a debt jubilee, because we have to acknowledge that the debts out there, a large portion of them cannot be repaid. They will not be repaid. And that the danger of simply allowing the system to implode rather than addressing them before it implodes and writing them off to reasonable levels that can be repaid. And in some cases, none of it can be repaid. That recognition has to take place. When it does take place, the banks, as they stand now, pretty much have to be liquidated. We need new banks to resume their traditional roles of savings, being a safe place to put your money. If I'm not making a joke there, I'm sorry. Where you actually save money and they make loans to worthy businesses that have managements of character. And until we get back to that, nothing can possibly change, can it?
Yeah, that's it. We have to celebrate those qualities that have stood the test of time in thousands of years, personal discipline, financial math, things that make sense, character, going with credit. We know all this. We've had centuries of this. We just have to reinstate those basic policies. And as I say, I think that every individual that goes to a point of financial bankruptcy or crisis typically learns this lesson. Most people have a breaking point where they go, aha, I see. I understand now why spending more than you make is a bad thing. And let's face it, the moral hazard bubble that has been in play now for the past many years was about originally consumers spending more than they should and getting limitless credit and then rolling it into an asset bubble of their house and starting fresh and then borrowing more. So they had a limitless line of credit for a number of years, and now the banks have had that as well through the underwriting of the Federal Reserves of the world. They've had that limitless line of credit. So they didn't have to change behavior. They could just go back to the same old reckless policy. Now we're going into a phase where we have to have some respect for capital again, which means companies can't just buy a bunch of shares and throw it out there and hope that investors make something on the upside. They have to actually pay dividends to keep their capital. They have to treat investors fairly and pay them regular installments to buy their patience over time. That's a respect for capital. And borrowing has to make sense. People have to look at the availability of whether the person can pay it back, their credit, their business model, and what their current debt ratios are. All of that is how you get respect for credit when you're looking to borrow or lend money. So those basic balances, if we can get them back in the system, I believe that, over time we will heal it. But the present leaders, look at there was another headline today that JP Morgan was doing money laundering for the Mexican drug cartel in the last few years.
I'm so shocked.
Surprising.
I'm shocked.
That's not surprising. Nothing should surprise us about this sector. It has gone to the very wall of evil in human behavior, and so now we have to find our way back.
I remember when I went to college and we talked about borrowing the 3 C's, which were capacity, character, and collateral. Now we have credit reports, we have a spreadsheet, MBA spreadsheet, and we have a roll of the dice. Those are the 3 factors. Nobody cares about the 3 C's, but we have to go back. No question about it. These banks are amoral. They will do anything to make money, and they don't care what happens as long as whatever happens down the road when they're comfortably retired in their villa in the south of France. And on that note, Danielle, we got to get going. People looking to find out more about you, Juggling Dynamite, where would they go?
JugglingDynamite.com.
All right. We'll talk to you again in a couple weeks. This is turning out to be an interesting summer. I don't think that the bigwigs are going to be able to take their traditional 8-week vacations this summer. There's going to be too much going on.
Too bad, so sad. Thanks, Gary.
Take care.